Well, the S&P 500 beat up the short people again on Friday, as most people were probably expecting it to pull back as it reached this 200-day moving average. But of course it opened up higher, gapped up higher, and actually produced a green candle for the day. Another observation is this is a bit of a doji here, which means that if the S&P 500 opens up positive on Monday and remains positive through 10:30 a.m., it'll probably close higher for the day, making it an even stronger bullish candlestick here above the 200-day moving average. On the other hand, if it opens lower and is continued lower as of 10:30 a.m., it'll probably close lower for the day and again test this 200-day moving average. A little bit of testing right here would not necessarily be bearish. For it to test it and then bounce back above it and move on up would actually be, in the intermediate term, a pretty bullish sign. Google probably beat a lot of people up on Friday also, because they may have been expecting it to do the same thing that it did last quarter. Last quarter, it also gapped up, but produced a green candle and moved way on up even after the open, whereas this time it went on down after the open. My thoughts would be that if you had bought it the day before the earnings gap and you're wanting to hold on to it, you might want to write some covered calls, because a very likely strategy is that it will do a gap fill to about the 675 level. But longer term, I do think it could reach the 750 to 800 level. Google's FANG cousin, Amazon, did the same thing. It gapped up higher and produced a big red candle, although not as big of a red candle as it did last quarter. Facebook, continuing with the FANG stocks, looked much healthier because it produced a green candle with a gap up, although the gap up was nowhere near as huge. And the same theory here after a doji. If it opens up positive and is still positive by 10:30 a.m., I think that it will continue higher throughout the day. But if it opens lower and continues lower through 10:30 a.m., I think that it will close lower for the day. Continuing with the FANG stocks, Apple will report earnings after the close on Tuesday, and it looks like it'll at least get to the 122 and test this 200-day moving average. It may actually gap up Wednesday morning, but I wouldn't expect a 10% gap up, as that would take it to about the 130 level, and that would be a pretty significant level. But I do think you could probably, for at least the next couple of sessions, get some upside off of Apple. The retail sector has been destroyed, especially last week. You can see that Macy's has been in a downtrend here for 3 months, even causing its 200-day moving average to roll over to the negative. And I wouldn't purchase Macy's yet, but I would put it on my watch list, and I would think that if it can get above its 8-day moving average, and if by that time the 8-day moving average has flattened out or turned upward, that would be a good time to buy. And it may go back and test its 200-day moving average, which by that time would probably be around 60 or so. But you're still talking about a 20% gain if that were to occur. NILE is one of my favorite seasonal plays for the month of November, and you can see that it had a bit of a bottoming tail here on Friday's session, and it's still well above its 200-day moving average, although that 200-day moving average is slightly to the negative. But if you look back at what it did last November, you can see that it was a huge gain in November. You can talk about moving from 30 up to about the 37 level. So you're talking about a 20% gain. NILE is one that I would also put on my watch list. However, I would wait until the 8-day moving average has begun to have an upward slope again before I would jump into NILE.